Here are the past picks of David Burrows. He selected these as top picks June 21st of last year, so a little over a year ago. H&R REIT, 1683 is where it was trading, up 35%. So are you prescient, or could you have just thrown a dart back then and most REITs would go up?
Well, this is the biggest weighting in our portfolio, REITs. So REITs make up in our income fund about 20% of the portfolio. On average, they're 99% occupied. They've got pricing power because they're not overbuilt. You're getting prices rising. They're able to raise capital for sort of 4.5% in the bond market and make investments to generate 7.5% returns. We can get a 5-ish% yield with a little bit of growth, 3-4% a year in AFFO, cash being generated. So if you can get 5% plus 3-4% in growth in the cash flow, that's, I think, pretty attractive. We really like the REIT group. It's cheap relative to the U.S. REITs. The balance sheets are in good shape. In the case of H&R, they own the Bow in Calgary, which will be the biggest building in Western Canada. It comes online a year from now, so their cash flow will take a bump. And it's a core position, and I don't see selling it anytime soon.
Just so we don't not explain acronyms, adjusted funds from operation, key metric of REITs?
Of REITs,
right,
yeah. How much cash they have that they can pay out and do business with.
A lot of our viewers would know that, but just in case for those who didn't. Keyera Corporation was a past pick as well. KEY in Toronto, 27.57. Nice call here, up by 65%. You're still holding this? Yeah,
the second biggest weighting in our income portfolio are midstream energy assets. So Keyera has a couple of businesses, but basically they do gas gathering and processing, and they have some pipelines. But the best part of the business is that they strip gas liquids out of the gas and then resell them. And they get a good spread doing that. So a lot of their facilities are located around the oil sands, and this is why we like it. We know that oil sands production is going to double over the next 10 years, which means that they need a lot of that gas liquid as condensate to help move the bitumen through the pipelines. So they got a natural buyer right there. The pricing is going to continue, I think, to be strong. They should be able to grow their cash flow 4 or 5% a year. And again, we'll get sort of a 4.5–5% yield. This is the kind of asset you want to own in this market. It's very predictable. They're long life assets. There's nothing that tricky about running these facilities. And there's a bunch of them we like: Pembina, Keyera, Interpipe. There's a number of them.
I'm guessing of the stocks in Canada in the energy sector, you're not going to find a much better chart than the one we just saw in Keyera.
No, and I'd buy it today. I'd buy it today. I think that it's behaving remarkably well, and I think that there is going to continue to be a flood of money looking for yields when you look at what you can get in fixed income. And there's a lot of people who have said, I don't really want to buy common stocks. They're too volatile for me. They're looking for something in the middle. This gives you an equity-like return with an income-oriented return characteristic. I think it's very attractive.
Okay, David, and I'm guessing this one just didn't work out because you sold it to Eldorado Gold, 1822. It's down 21% since then. When did you get out?
Yeah, so we did own golds last summer and came out of them over the course of the fall. And I can't tell you exactly what price we came out, but they just, as you can see on the chart, stopped behaving well, and we run stops and we just get stopped out. So thank goodness for stops. I mean, in full mea culpa, we owned Sinoforest. You know, we run the stops. We got stopped out at $21, thank goodness. You're going to have lots that don't work, as long as you've got some way of getting out of the positions before they turn into big problems.
All right, David. Eldorado Gold, Keyera Corp, and H&R REIT. Those are your past picks. We've got all sorts of calls lined up, but there's still room for some more, and emails as well. For David Burrows, half an hour to go. North American large caps is the topic. We will see you after the break.